All right, so let's jump into it. Last week, I said on Sunday to mark all the quadrants of this weekly order block. You'd want to get the first quadrant 25%, the main threshold 50%. All right, we want to look those as tellers of what market is going to do. If we were going to go lower here, or we were going to have strong support, obviously it bounced directly off the main threshold, but up down to the daily for more detail. Right, so we open up Monday, we open trade down, we hit essentially consequent encroachment of this wick here, and we rally, back up in, and then following day Tuesday, CPI, 8:30 news driver numbers shoot us right down, right down, right to the daily order block main threshold, which is the other level that I told you to, you'd want to mark and extend through into the beginning of the week. But almost the most important thing, and probably the most beautiful thing, was this return back into the weekly order block, and that was pretty spot on there. 142.25. The low of this candle is 138.0, so 4 points off of the actual low. Drop down into the 1 hour. One thing I do want to look at is daily. So if we continue to rally, okay, we have PPI and jobless claims on Thursday. So tomorrow we have no news drivers. Now, one thing that I do want to see is, I want to see if this little area here can act as support tomorrow, especially looking at price action today. See what I mean? I want to see if this can potentially act as a inversion fair value gap, only because once it has been formed, we have huge buy side delivery up, we have sell side delivery down, now we have it back up, and we close above the consequent encroachment of that wick. So that might be a bullish sign if we respect these levels tomorrow, but we'll see. Some more insight on the lower time frames. Let's dive into 20 hours. So scrub. All right, so you see, Sunday into Monday's trading, we drop down, we consolidate all in this bullish order block here. We just kind of bang, consolidate all while the bodies close above the first quadrant of that weekly bullish order block. So acting as support there, rallies. All right, we do form a fair value gap. We form a fair value gap here. It does overshoot it, and before it kind of rallies, kind of consolidates, goes up from that bullish order block, but ultimately it is, it's CPI. You never know what kind of crazy move it's going to make. I mean, that's kind of that. But we do trade up into here, open, we go down. Again, you see how we bounce off of those daily and weekly levels. Very nice precision there. Yep. So after that, we treat this essentially as an inversion fair value gap right in here. So we just kind of consolidate all throughout there, and then we rally, and then we come back down into a new week opening gap. That is the old week new opening gap, but these levels, they're reused over and over again on top of trading into this order block here, from the open to the high. Map consequent encroachment out on that. That's a level that you want to look at, how it reacts to it, on top of new week opening gap, acting as support again. Send it higher. Okay. So what we want to notate on this one is here. That is area of interest that I want to see, or show you rather, on the lower time frames. Alright, and then also what I want you to look at is, although it's CPI and we overshoot it, you have this low to high to lower low. This upmost candle, that is your bullish breaker. If you extend that across, you see price trades down. Let's do it like this. Yeah. That entire range. That entire range I'm looking at as my breaker. So you see, obviously overshoots it, but look at the bodies. The bodies of all these candles stay both above this order block and this bullish breaker. Alright. So I am going to take that off. It's just already too much on the chart. This is all just freeform, whatever I see on the chart. I didn't catch everything today, so this is essentially just what I see in price. And for what I did trade, ended up making just a little bit over $1,000. Didn't really do much today. Just took a couple of, small scalps. Only traded one contract just because it's a little harder now to watch price, every minute, every candle, between working and everything. Alright, so here on the 15-minute again, we have this breaker. We're fine, but of course we would just be using the body. We're not, using the wicks at all. But we have a low, high, lower low. This last up close candle before this moved lower. You'd want to look at this. We have, so from the open to the close open. So, the open of this candle, which of course is at 8:30 CPI opening. News driver open to the close of this candle. That is mean threshold, midpoint of this breaker, which is the last up close candle before this displacement move lower. We take out sell side, then we take out buy side, come back down, take sell side again, knock them out of anyone who went long. Anyone that went long down in here, they're knocked out. They're not allowed to, participate in this move going up. Alright, that is your breaker, and of course 50% level of that breaker. Like I said, with these wicks, we ignore the wicks. Wicks do the damage, body sold the narrative. This is where the bulk of the volume is in that candle. That's what we want to look at. 50% of that, you see we bang it, boom, boom, twice, and then we just rally higher pretty much throughout the end of the day. Take that off. We'll just remember that is just below, consequent encroachment of this new week opening gap. Alright, so of course higher up we have on top. This is probably one of the strongest PD arrays that you can see, honestly, on any time frame. But when you have, this is a unicorn. When you have a breaker and a fair value gap, you are essentially guaranteed for a strong reversal, or move higher from there. Sorry. That is a unicorn. That's beautiful. So, drop into the 5 minute. So, you see, here. And then we have these sell side liquidity pools here, here, and here. And so I'm going to take this off. So as you can see, again, 8:30 news driver, they take out the, like I said, just like with non-farm payroll, CPI, typically the go-to is they're going to run one side of the marketplace and they're going to run the other, and then they're going to do some kind of consolidation move or retracement lower to either take out sell side or trade to a discounted rate, and then typically, like in this case, rally, or it could just continue to go down, 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 down. It's all in what's happening in price, but right here at 9:45, leading into the 9:50 to 10:10 macro, you see we bounce off the mean threshold of that daily order block after taking sell side again, and we rally, take out this high here. So that is your, market structure shift for prices to go higher. But if you don't want to wait to get in until then, remember what I said on Sunday. Whenever, typically whenever you want to find an entry, it's going to be, from the low to the high of whatever leg of price, every expansion to retracement lower, you want to be buying, below 50% or at 50%, to get in. Now, of course, with this, so from this high to this low, those are terrible. We're just going to call it this high to this low, okay? You see from this high to the opening of this wick, those candles basically just kind of stagger around, consequent encroachment at the midpoint, also above the midpoint of the new week opening gap during the going into the lunch session. So typically during the lunch session, which starts technically at 12 o'clock, we drop down. Typically it's going to be a rate on sell stops. For, in this case, if we're bullish, it's going to do a rate on sell stops and then rally higher, or it's going to trade into some kind of inefficiency and a discount, or in this case above a balanced price range. So remember, whenever we get an immediate run up like this, we are looking at this as a balanced price range. If we do see any kind of retracements, we don't expect it to go from essentially from this, the open of this candle here to here. All that, this entire range where we have fair value gaps on both sides that overlap, that's a balanced price range. So we don't expect it to go down any lower. We don't see this as a fake out or anything like that. So whenever it returns back down, we drop back down into that bullish order block, that wick there, and then we drop into fair value gap here. So 5-minute fair value gap. We'll just rotate that. Great. And then if you remember this area here, this is that daily CPI. That is the CPI there that we want to see act as a potential inversion fair value gap, which it did act as today. That was like 5 minutes. So, set daily SIBI, we trade up into consequent encroachment or the midpoint. We come back down into an inefficiency, which is a busy buy side imbalance, sell side inefficiency. We trade into that, essentially close above the midpoint of that, and then we rally higher into the end of the day. And that begins right after lunch at the 1 o'clock hour, going out. Alright. So, into the 1 minute. No, not that. That's not what we want. Okay. Scrub back. And this will be a lot more detailed for the Sunday review. This is kind of just a late night. Try to cram it in there, but we'll dive further in. There we are. Okay, on the 1 minute. Right. There we go. So on the 1 minute here we have the 8:30 news driver, sends price down, then they take a buy side, they run it up, right through there. We have a fair value gap that's left behind here. Now remember this area here, this is a 5 minute fair value gap, but we can refine that here in 1 minute. You'll see why we want to refine that here. Yeah. We have that. So, come back down, and then we rally up just a little bit into this upper and fair value gap. You can look at that as a potential institutional order flow entry drill. Where you have, there's this tiny little fair value gap here, then we have this one here. I would say you would have had 7 points of heat on that one. So if you were to get out, enter about 1 handle, 2 handles above here. Typically 1 handle is going to be your entry. Of course, your stop would, I would say, would be above this inversion fair value gap here, which you can see, we trade into it, and here we trade in that range, we rally off of it, and then we break down, we come back into it again. You see the bodies, we open, close, opens at the top of that inverted gap, then we open, go higher, we come out to do a sales stop right here, both of these relatively equal highs, and then we drop aggressively lower, retracement in, again, mitigation block, that is also an entry. You enter at the body of that candle, so close of that candle, that's where your entry would be. And then of course you have institutional order flow entry drill here. We break lower, we treat this a little bit as resistance, but of course but then again we come right back again higher into this mitigation block. And for your notes, it is completely normal to see price do 2 runs. When you see a mitigation block, it is normal to see, a couple of taps into that. So if it starts going down and then it comes up, don't be scared. I mean, that's what your stop loss is for. But as you can see, at 9:30, we trade up again into that mitigation block. and then we just flush straight down lower into the 950 to 1010 macro. From here, we bounce off of the daily order block, the mean threshold level, 50%. We rally, essentially. Again, you want to look at this, especially this. You don't want to see this gap be closed in. For one, this is essentially equivalent price action on sell side delivery and buy side delivery. On top of, again, anytime I see, these overlapping sections like this, I don't want to see price return back down, because this is essentially balanced. It's been delivered efficiently, sell side and buy side. So I want to see this imbalance remain unfilled. So here at 10:04, we start a retracement into this fair value gap, and then look to your left. What is this? Did price respect that at all? Going up on top of the narrative. This I want to see act as an inversion fair value gap. Okay. Let's drop this here. Bam. So we want to see this act as an inversion fair value gap. So typically this would be a bearish fair value gap, and if price trades into it, it'll fall. No, we look at it being an inversion fair value gap. Right here, your entry, you get two options. Boom, boom. You get two chances to get right into that fair value gap, and that's it. So we rally higher. A little bit of consolidation here. Right, again, consolidated inside of a fair value gap. Anytime you see this price, this tendency in price, while the narrative is bullish, anytime you see that consolidation, essentially assume that price is about to rally higher. Of course, if I was in this, my stop would be just below, probably consequent encroachment of this wick. Or if I hadn't moved my stop before, to be just under this inversion fair value gap, that would be overkill. I mean, that might be a little bit too risk for my size of an account, but I would say just below the consequent encroachment of this wick is what I like, or even just just below that fair value gap, as this would be another area that you don't really want to see traded to. And again, this is and almost would make me want to think of a institutional order flow entry drill, but didn't quite give it. We rally up higher. Rarely do you see much down close, and if you do, they're very small compared to the run up. But we trade up into that daily inversion fair value gap. We fall lower. We have a retracement here into the daily inversion fair value gap, and we have this order block and this fair value gap in here. All right. We fall down again, fair value gap here. Fall down. Now, for your notes, so this is going and closing out the lunch session. Again, in the lunch session, it's going to retrace to a discount and whenever it takes out that liquidity pool above or below the marketplace, or if it trades to a discount and to some kind of inefficiency. Okay, so we trade down from a range, thinking of this low to the high up here. All right, the low to the high there. That is the projection that I'm going to use there. That's the deal in range that I want to use. So we drop below into a deep discount, almost OG, OTE, almost max. But we trade down into this imbalance, we consolidate, and then we rally. For your notes, anytime you trade up into a level you think will be an inversion level, and you know that the narrative is biased, what you want to do is, especially like this where at least relative equal highs there, we want to wait for it to drop down into a deep discount to some kind of inefficiency or large liquidity pool. And once we get that market structure shift, we want to see it run higher and higher and go through that and just fill in that void, okay? So that is what NASDAQ did today and why I wanted to see that act as an inversion fair value gap. And as you can see, it acted beautifully on price. Of course, now leading into tomorrow, we still have PPI. Take a look at what she's doing. I don't really look at the 1 minute chart if I ever look at Asia. Kind of banning her. Let's see, we gapped down into a discount, took out sell side here. Now we rallied up. Still came down, but right now we're consolidating over the midpoint of that inversion fair value gap. So we'll see how London does tomorrow. This fair value gap here we traded into, and we'll see if maybe we break below here. And as far as tomorrow, what I would be looking for, go back to the daily. What I would be looking for tomorrow, like I said, first thing would be, we don't have any news drivers tomorrow, so I'm not sure. It might be kind of an inside day ahead of PPI. Might not really do too much crazy stuff, but I would like to see this act as some kind of support here as this daily inversion fair value gap. If we break, so if we get a nice reaction off of this area, or I would say the midpoint to first quadrant here, I would like to see a run up potentially to a previous new day opening gap, and then also I'd want to see this volume imbalance act as support or resistance depending on how it trades. But ultimately I would want to see the lower quadrant and the midpoint of this would trade it to. That is something I want to see. So those are things to mark on your chart. As it stands now, everything looks pretty bullish. How we bounced off of the weekly and daily bullish PD arrays and then just rallied higher today off of CPI kind of tells me that this was just consolidation. Big hedge funds, everybody just kind of accumulating down here. Consolidation is kind of what this looks like essentially. Granted, we have a nice range in between here, but from, like I said, if you want to look at the bodies or wicks, when it's high, this low, we've kind of just been in this range. So wondering if we can break out of this range. Looks like NASDAQ is stubborn to kind of get below these lows, or essentially it's been leaving every imbalance that it makes or inefficiency behind. So that might just be the continuous thing, but we'll see tomorrow, and then definitely Thursday with PPI and jobless claims. One thing I do want to look at, so for intermarket analysis, we'll come back to NASDAQ. But one thing I do want to look at, so essentially anytime the dollar is falling, so Dixie, you can look that up on your trading view charts with the symbol DXY. And you can see essentially we trade almost to the high end of that fair value gap there. We just come a little bit shy of it, but we also have this mitigation block here to look at, and then you see we immediately snap back down. So that is almost an immediate rebalance. That is signs of potential indication of price going down lower. And of course, dollar, while dollar is going down, typically indices, foreign exchange markets, they're going to go up. So how we react in this volume imbalance here, I'd want to see that we could trade up into the consequent encroachment of this wick and of this fair value gap here, and we could even push into this volume imbalance. There's some inefficiencies here, but we'll see. It still looks fairly weak to me. This is kind of a small bump and grind up, but we will see. We drop down on the 1 hour right here. That is that daily imbalance. Then you see here, do not disturb them. We see here, market drops down and then gaps down into Asia, falls down, essentially just all down close candles all throughout this fair value gap on the 1 hour chart. Now here we trade up this high of that candle. That is, we're just going to say 177. Of course it's 103.177, but it's 177. The low of that candle is 178. So one tick above, and that's that bearish fair value gap shaded in that gray hue. And fall down lower. So some things I did mark on my chart is the consequent encroachment midpoint of this fair value gap, and then also we have that new day opening gap here. If we do trade lower, how do we react in there? And then we also have the 15-minute bullish order volume threshold, which you'll see that here. So if dollar does want to rally, if it treats any of these bullish arrays, if we see support in here, then you could expect for indices to kind of either consolidate, or they may just start to retrace just a little bit. Well, we've already been in consolidation for a while with NASDAQ, so, but it is day before PPI, so bear that in mind. But notice this order block, this entire 1, 2, 3 candle range, that is your bullish order block, and that midpoint is right here at 807. And then of course, like I said, these two red lines, that is our new day opening gap, and of course our bullish order block if we trade into it. And then 5 minute, what do we have? No, you gotta see how prices move throughout there. But like I said, risk on means dollar is going lower, risk off means dollar is going higher. So as you can see, consolidated under the 1 hour consequent encroachment. Now we have had a shift in market structure here. So we'll see how this trades overnight. Technically, like I said, risk off when dollar's going higher, so we'll see what kind of retracements we have there. Let's go back to NASDAQ. No. Let's go back to the NASDAQ. 1 hour. So same thing here. I'm gonna take some of this off, and I'll probably stop it at this. Probably drop down to the 5 minute, 15 minute. We see we've had bullish prices all throughout. We see we had our breaker, and then right here we trade to it. We rally higher. We are consolidating right here at the daily inversion fair value gap that we're looking to see. We're going to want to see if it blows, kind of can trade through here, or if it retraces back through to this fair value gap here, midpoint of that to the high. And I almost want to look at this as a propulsion block, just because it does trade down into this order block but doesn't trade into the main threshold of it. So the high of this candle to the open, that's something that you'd want to look for as a potential bullish entry. Of course, this isn't financial advice, but that is something I would be eyeing. The high to open and the midpoint of this BISI or fair value gap, bullish fair value gap. If we drop down, you can treat this inversion fair value gap as support, and then with a rally, I like to see this old new day opening gap, and you can see the levels here, to act as some kind of support. We do have a potential breaker in here. So how price goes from, high, low, higher high, or you could even look at, if you wanted to, high, low, higher high. Either way, the last beefiest down close candle, which you can use 2 for your analysis to see tomorrow. But right here, that's what I'm looking at. That move up, that to me, yes, started here in this area, but right here is where a lot of that volume was. But essentially, midpoint here of this fair value gap, you can look to see, how we act in there. Well, midpoint of this CPI. Take this off, down off, midpoint of that CPI. So gotta change these colors up. Right in there, the midpoint. How do we act at consequent encroachment, which is just above the new day opening gap? These are for you to look back at. Write these down. Observations. Okay. Alright. 15 minute. Of course, we have order block here. Main threshold of that, we want to see the midpoint from the open, close, midpoint. We want to see that respected. Again, I would only be convinced of lower prices right now if we get main threshold of this broken, or whatever happens overnight. If we manage to even break through this area, I don't see that happening, but we do have an inefficiency here, although from this close to this high, and then again from this open to close, this area here is essentially balanced, so that would be another area if we blew through it. That would kind of put the nail in the coffin, especially if we just blew through this. Whatever you got. Then I'm definitely looking for lower prices, but for now, I'm mostly bullish. I'll do a more concise review tomorrow, but we'll drop down in a minute. I think that's about it, guys. Those are those higher time frame levels to look for. Like I said, we have this balanced price range. Come back into the inefficiency. If they wanted to, we have sell side here, those relative equal lows, and then of course we do have sell side below here, and then we have that order block, and then of course below this sell side we do have this fair value gap, so you could extend that across into tomorrow and Thursday especially. And then of course we have this consolidation and sell side below here. But I'd say that is it for tonight. Quite long-winded. I'm gonna have to get these shorter, but that's about everything. So I'll talk to you guys again. Good night and have a good one.